Cool. So live, we're just going over gold. Um, just gonna quick analysis. So maybe you catch the stream, maybe you don't, maybe you watch it after. Cool. This is my daily time frame. You'll see I have a couple liquidity zones marked on here. I got a liquidity zone here that I have marked. I have one here. Have a liquidity zone here. And then I have some smaller ones that are less significant. See are indicated by the dotted lines. I'm just going to take those off because they don't really matter that much. But yeah, you can see I have a trend line that I have drawn right through here. And then I have the bottom of the trend line coming up through here. So when I draw these out, that's what you mean is I have three beautiful touches there. Okay. Delete that because I don't really need it. And then I just have the beginning of a trend line here. So it's not as big just because it doesn't stretch as far. But yeah, this is a beautiful trend on the bottom and a beautiful trend on the top. And as you can see, price hasn't really touched up here. And a trend line is just used for, no, I'm not going to say kicks and giggles, but it's not as important. You just take it for what it is. So, and for those of you who may be watching this for the first time, I've been trading for, let me grab my mic. I've been trading for 5 years now. 5 years in August. I originally started off inside of IM Academy. If you've ever been in trading or started trading, I'm sure you went into some network marketing company. That may have been how you found out about it. I didn't find out about it through a super wealthy friend, unfortunately. It was through IM Academy, but it is what it is. It was still a great experience. I wouldn't take that away from it at all. It was a great learning experience. I definitely fell in love with the marketing side of things. And honestly, for like 6 months, I didn't even know what trading was. Like, I was sitting there selling a product, and then I'm not going to say 6 months, but probably 4 months into it, I finally started realizing the power in trading. So if you're going to watch someone who actually knows the value in this thing, it's definitely me, because I didn't see it at first. And then all of a sudden I'm like, hey, wow, there's actually a ton of value inside of this. So yeah, here it is. And I'm 5 years into it now. There's definitely been a lot of points that I wanted to stop just because I got my feelings hurt. But hey, is what it is. So as you can see, we're definitely in an uptrend in the market, right? As we start to zoom in. Now we're on the daily time frame. We had a fail to break lower there. So we have a lower high or a higher low that formed. Push up, another higher low, push up, higher low, push up. So what we would look for to see if gold was going to start coming down is, one, if we broke that, but really if we broke these guys right here, that's when you would start to say, okay, gold's going to start to go lower. It wouldn't go all at once. It definitely, if it drops all the way from up here down here, we're going to see a lot bigger correction where it looked more like something like this. I didn't mean to draw that big spike, but it's there. So yeah, we would see a lot bigger correction. It definitely wouldn't just make that massive drop. But yeah, we would start to see if it was going to go lower there, really there. And then if it breaks these guys, you can definitely count on it maybe going a little bit lower, but it's going to start to form a much bigger correction in the long run. However, when we zoom in now on the daily, what is this we have? We have a beautiful flag forming on the 1 hour. You can see it. I have it marked out there. Dang, my paintbrush sucks. I'm horrible with this paintbrush tool. I don't even know why I attempt, but I do. But yeah, a flag, there's the bottom of it. And now we're starting to get the top of the flag. So usually we're going to get some type of correction, and then we'll go up here, maybe break these highs. And then I'm not looking for the market to go short anytime soon on gold. Not a huge correction short, I should say. So now we're going in on the 4-hour time frame. And take this out. You're going to start to see a lot more in my chart work, especially in these areas. Let me show you my flags that I have. I have it marked off of this one, and now we have a touch here, and we have a touch here. And then up top, most people are going to say, like, why are you using the wicks to mark? Because the same thing here, most people, they would have taken their trend line and then butted it up against, let me show you, they would have taken it and then like forced it up into here. And then look, all this space is all like unaccounted for. Like you have a whole section of the chart that you're just like playing guesswork with. So through time and experience, I've noticed that I'm going off the wicks. I'm not even trying to touch it up here because that's, with trading, you have to read between the line. So reading between the line, I can really count that as a touch. And really what that is, if we take our trend, look at this. That's a beautiful channel. But ironically, look at this, y'all. So crazy. It's almost like it's done this before. Look what we have, except a more drawn out version of it. Look at there. Did the exact same thing over here, and that's what we're getting. We got that first push up. Look what it did. We got a steep pullback on this, and then the price pushed higher. So we could almost copy this little bit of price with our bars and tool pattern. Get something like this right here for us to look to go higher to the top side. Maybe like that right there. And that'd be kind of what we'd be looking for in gold for it to take off. But just for the sake of marking up the chart, we're going to continue. So we're on the 4-hour time frame. I'm going to go ahead. I'm going to draw my trend here. And I'm not going to draw one on the bottom because I already have this on the bottom. Okay, so there's no need in me like deleting this. I could maybe draw it back some. I had a liquidity zone like right here that it never really touched. So, it never made it down there. It grabbed this one and then it pushed up higher. But there's this 1, 2, 3. We have the trend coming down this way. And something I like to do in this is when you have these big steep like areas in price, don't try and force your pattern on it or in between it. Just separate it. Separate your points in price and get the information you need out of it. Like I wasn't going to try and force this into the pattern there. I wasn't going to try and force this section into the pattern here. You got to read between the line of where the patterns are at. So don't try and force it. I'm just going to leave my overall trend line on the top. And since when we zoom in, okay, we can see that it actually broke above, tested the trend line, not once, but twice. Let's drop down to the 1 hour. And there. Now you're going to start to see some of the chart work. So this was our flag. Okay, this down here, the bottom of our flag and our bottom of our trend line. This is a liquidity zone on the 4 hour. We're going to just write this too. And then I'm going to have to do that to the right. And just for the purpose of it, let's just take that off. We don't really need that on there anymore. I don't know. I kind of like to have that. So I may just have to deal with it. Kind of just helps me fill in what's happening. And we have price come down here. And what it did was it failed to break the low. Okay, this was the low, the liquidity. It pushed up, came here, came lower, made a lower high in the smaller form of a correction. That was our last higher high inside of this like correction. We just broke it, and we broke it here too. So we broke it twice. So now we just formed a new high. Here's where most people are going to make a mistake. You're going to try and force the sell of the market, and you're going to miss out on the move because you're taking bad trades. When in reality, you should be waiting for the market to tell you what it wants to do. So this would be like in the opposite. If I invert my chart, this is like trying to catch a falling knife. You know, when a knife's falling down, you're trying to grab the knife out of the air. You're just going to slice your hands. But in reality, if you just let it bounce and give the sign that it wants to make a bit of a reversal, you could take it back up into these areas. And then you're not trying to force it. You know, you're not trying to force the trade. I guess that'd be the best situation. And here's the crazy thing. What if the market, it doesn't want to turn around, and instead it just keeps pushing higher? And because you're trying to force something, you see it starting to slow down up above this area, and you're trying to sell it right here, and again, trying to force into the trade. You are selling here, expecting the market go down, and in reality, the market just continues to push up, and then you miss out on all the upside of this trade as well. So just being patient, especially in the area that gold is in now, is going to be so key, because it's gold. There's no telling how long these markets, like to run. And really, I'm not even going to be looking for a retracement in the market, because I'm going to be looking for gold to tag this high, my 4 hour liquidity zone. Now that it's broken this, and look, it just came back from this. It still has momentum. There's no sign of the market slowing down at all. We might be able to look at some sort of little bit of a rejection in this area, and I'm just going to back it. Maybe we get a little bit of slow movement in price, but there's nothing here that's like significant in blocking it. Well, I guess if we went over, zoom out, kids. Yeah, so we might be able to see some type of rejection in this area. You're not going to see me put a lot of bars like this through my chart, but I will put them in there because it's important to know, like, is this a common barrier that price comes up against and likes to play around in, then move up again? But something that I'm going to be wary of is, look at this. Every time price comes in this area, look at these wicks that it's leaving behind. And we know next week that the market has a ton of folders, right? A ton of red folders. So you definitely don't want to get caught on the wrong side of this thing next week, because you will get left to dry. And yeah, again, like, I'm drawing this here, okay, and here, and they could have a possible third touch, and yeah, maybe look like a nice little flag, and like, oh, you could trade the reversal. But gold does not work like that. It does not work like that. Gold could literally act like it wants to reverse and then just shoot all the way up to here and then come back down. And then you already lost all your coins, so you can no longer participate in the market. I know this is a stream we're telling you like what you shouldn't do versus what you should do. There's a beautiful flag here. Very apparent. Beautiful flag. Nice push up. Market came back down, snagged this liquidity zone. I was looking for it to come down here anyway. So most people, because the market made this little wedge, okay, which is it's a valid view of the market, having that wedge right there. But people forgot about this liquidity zone down here, okay? So everyone loses their sight of this liquidity zone that never got grabbed. The market starts to push higher. It comes up into this area, it acts like it wants to reject. It starts coming up, and then guess what you get? This massive wick down finally collects the liquidity zone, and then it pushes higher. And most of the time, it is the wicks, especially on gold. It's not just price forming all the way down there very cleanly or very slowly. You're going to get those wicks that just about yank your soul out. So yeah, we're looking into this area now. Shout out to the one person watching. Let's go. Sweet. I appreciate it. Don't feel like I'm talking to myself for the last 17 minutes now. So yeah, we had price form this wedge and pushed higher. So right now, again, if we just zoom out a tad, wait for an indication that the market wants to either continue or turn around. So if that means that you don't trade right away Sunday, perfect. You don't want to be in the market, like I like to trade Sundays. I like to trade Asia sessions on Sunday. That's my baby. If you're going to catch me trading, I promise it's going to be just like 2 hours after market open, or even market open sometimes. And I like to trade the slower markets. So I'm usually done by 6 a.m. and I won't trade for the rest of the day. So that's where I get a lot of my moves, is not even London session. Sometimes my take profit will get hit during London session, but I'm definitely taking a majority of my trades, placing them at like 7 p.m., 8 p.m. Mountain Time, sometimes 9 p.m. Mountain Time, and I'm going to bed. I'm not even staying up watching the charts. I'm placing my trade. I'm putting a stop loss. I'm going to sleep. You will not catch me up all night. I got stuff to do in the morning. So yeah, there's gold. I definitely could see it continuing as we zoom out again on the much higher time frame. Coming up into these areas. And I feel if I go ahead and bring up Forex Factory, let me bring that up for us real quick. Yeah, there it is. Let's go to news. And if y'all don't use Forex Factory, here it is. We're going to switch over to the tab now. Here's the news. Oh, you know it is? It's my FX book. I use Top Step. That's what I trade for as a prop firm. So on Top Step, you have a lot of the news and stuff like that. So I don't really have to like look super hard for it. Home, economic calendar. I think that's what it's under. Yep, there we go. So today's date is the 7th. I thought it was the 8th. So we're going to go into the 8th and 9th. And there's a bunch of red folders. Okay, maybe not as many red folders as I thought. Here it is. It's towards the end of the week. We have a huge amount of red folders. So more than likely what's going to happen is the beginning of the week, we might have some movement. And then coming into like Tuesday or Wednesday, sometimes even Thursday, maybe it could be Wednesday or Thursday, your markets are going to be a little bit slower. And then coming on to Friday, when all the news and stuff comes out, is where you could have a lot of your movement. So what we could have happen is price starts to form a little bit of information in these areas. We might get a little rejection. And what I'm going to be looking for this week is the not so obvious move. I'm not going to be looking for like, oh, it's about to take off and buy right now. As soon as I have the inclination that, yes, I want to participate in a buy or a long position, I'm going to look below at where the missing spots are. Like this right here was a missing spot. This was a liquidity zone that never got grabbed. So as the market pushes up, and I know we have news and stuff that was coming out that day, I'm placing an order here, not for the market to sink, but because I know the market's going to manipulate and catch people on the wrong side. So as soon as the market takes off, when news drops, everyone's starting to hit the buy buttons and the market yanks your soul out, and then you're left, with your stop loss, your daily loss limit hit, and then, you know what I mean? Now you got to buy another freaking account because you lost it. So definitely want to be in that position. Yeah, so I'm not even, there's not too much I can do right now on gold. I might look for a trade just from what I'm seeing here. Oh, I'm not even sharing my screen. Hold on. Just from what I'm seeing here, I'm not even going to be looking to trade gold Sunday evening. I might be looking more so Monday Asia session, like 7 p.m. Mountain Time. That's what time zone I'm in. I'm going to be looking to see if price is formed from structure. If price is not formed structure, then I'll be coming and I'll look maybe at London session around 2 a.m. Tuesday. And if I don't get anything Tuesday, I'm for sure looking Wednesday. And here's the thing, you don't have to participate every single day. And I'm probably just talking to myself, but you might even know that. You don't have to trade every single day. Just wait for that one good setup. Like this entire thing was from the 27th of June all the way to the 2nd of July of consolidation before we got an actual move. So that means some people I may have just been sitting here and like trading and trying to catch a trade and expecting for it to push higher or push lower instead of waiting for price to form something. If you aren't seeing a pattern form like this right here, I need to get a stylus. Wait for this. Don't try and just sell it or buy it just from this little bit of information. That's fear of missing out. If you have FOMO coming to the chart, it really only means one thing. It doesn't mean you're a bad trader. It doesn't mean that you don't know what you're doing. It just means that you need some more time and experience of looking at that market. The second biggest thing I could say, if you're having FOMO, if you're going to miss out on a trade or not, is narrow down the amount of pairs or currencies that you're looking at. That may be contrary to every single thing that you're going to hear out there, but find one thing and get good at it. Repetition is the mastery of all, repetition is the master, or is the mothery of all skills. There it is, something like that. Because within repetition, you're going to get the mastery. I've only traded gold for the past, I guess, year now. Me and my friend and business partner, that's the only thing that we've traded is gold. Why? Because we know if all we do is look at this one pair, this one piece of chart work, that's where you're going to get the most value out of the skill set that you're trying to gain. If you're all over the place, each market that you go to is going to tell a totally different story. It's going to tell you, have a totally different piece of price. You're not going to get used to the way it wants to act. Like gold, I can tell you, likes to have these long wicks. And if someone comes to gold and doesn't expect long wicks and they expect to trade it like a Euro USD or a GBP USD, which GBP still has some long wicks in it, but not as often. If you're not familiar with gold, you're not going to know what to expect. But if you know you've been looking at this chart every single day, just about every single day for a year, you're going to know its ebbs and flows, its ins and outs. You're going to know the patterns it's been forming, right? Because the market conditions change. And if you haven't been trading a set amount of pairs and you've been all over the place, you're not even going to be aware that the market conditions have been changing. So you're just going to miss out on the information that's being handed to you. You don't even have to go looking for it because it's going to be handed to you, because you're going to say, hey, you know what? This market's changing up a little bit from how it was trading last week. Or you're not going to catch that it really has been this entire month, it's been loving to trade at London Open or at Asia Open, or that the market's a little bit slower during Asia so you can get more consistent trades. There's just so many little gems that you can get out of narrowing down the amount of trades that you look at. I will show y'all this one. This has been my baby. Let me zoom out here. So I've been looking at Tesla since last year. Y'all want to talk about some patience for a trade? This right here just proved it to me in a nutshell. I looked at Tesla a year ago, and I could pull up the screenshots from the gentleman that I'd sent it to, but I had the market in this right here, okay, and I was waiting for a price to break below, and as soon as I got a break, I was either looking for price to trickle, then come back up, and then form this, and then come lower, but it didn't. It just sank. So as soon as it sank, and I saw it break here, there is all this empty space. Okay, so most people, again, you're going to be rushing into that buy, but if you're patient, okay, patience is a practice. Ooh, that's good. Patience is a practice, something you have to practice at. So if we look, I had a liquidity zone. A liquidity zone is a wick where price came down, came up, and then it never touched it before going up. That's what gives you a flag, is when you have a liquidity zone. So if you have a flag, more than likely you're not going to have a liquidity zone there. Just a tidbit of information for you. So I had this liquidity zone that never got touched. So what I did is I marked this liquidity zone right there, and I just waited for price to get here. And when it started making this drop, it was October of 2022. And then in January 23, I'm sorry. Yeah, it hit, it came back up. Price never broke. Here it goes. Look, it never broke this high, made a lower high, and price started trending downwards. So you can see we have the flag forming. I was looking at the wrong bit of information, but price is price, sorry. This is the chunk that I wanted to show you. So instead of it being off of this low, because that's what common sense says, right? That's the most obvious support line. That's the most obvious support line on this chart. So what I did is I went in on the daily time frame because that's the weekly. I looked in on the daily time frame. Hey, by the way, look at this, y'all. That's it. That's all the pairs you see me look at. The dollar, gold, GBP USD, Euro USD, Tesla, Bitcoin, and US 30. These other ones are for Top Step's market conditions. That's just what Top Step has as far as like what you're looking, how they have their currency pairs marked. So yeah, I looked past this obvious support zone that was on Tesla, and I looked just below this gap that was formed here. Have you ever heard the term like price likes to fill the gap? I looked below the gap because there was a liquidity zone right here, and I marked it because I said when price is starting to trickle, okay, they call this a descending channel. And what it means to have a descending channel is price is slowly coming down. You're not having that rapid movement, okay? It's giving you information. It's not just this like sudden jerk down, then it's giving you something. In a descending, so price is in that descending channel, and then it does something. It gives me another descending channel within the descending channel. That's called a pattern within a pattern. If you ever see a pattern within a pattern, go ahead and you can put all your money on black, because I'm not even sure if that's the right term. That's a casino term. Your boy is not inside the casino. I can promise you that much. If you look at you have a pattern within a pattern. Price comes here and it drops immediately down to this liquidity zone, and that's exactly where I had all my buys set. So as soon as the market pushed up, I was already in because I had all my buys set at $146 a share. So I bought in $146 a share. Price pushes up. I already know that it's going to break this, okay? Because we never broke the low here. Price is already pushed up. It broke this. I know we're going to break this at some point. It doesn't do it immediately. That's exactly what you want. Because if price breaks this immediately, you're going to start to have a bigger correction, which means that you're going to have to wait longer to enter the market again. So when price doesn't break this high, it starts to form this. I immediately start buying in this area. So I bought 2 more times inside of this area. Okay. And I didn't even look I bought in, that was the end of April. And from the end of April, price is just now getting to my target. But if you look at this, each trade this one's just over 1,000 pips. This trade is 677 pips, and this trade is at 727 pips. So I'm not even sure how many that is combined, but I know right now that my shares just off of Tesla are up like 60 something percent, 70%. And when you look at a long-term investment, okay, so if we just step away from the gold market or from a currency pair where you're more in it for a short-term gain, you're doing day trading, it's also good to have the skill set to where you can do long-term investing, such as trading stocks, because once you know how to read a chart, you know how to do technical analysis, you can start to participate in these bigger stocks and not have to sweat your money as bad. There's going to be so many people who are just buying stuff because they think it's a good idea, or they think it's cool to join the shop talk and like participate in a market that they have no clue about. But this stops being gambling when you're making an educated guess. It's still a guess at the end of the day because it's the market. The market's going to do whatever it wants to do. But if you're taking an educated perspective at it, you're going to have a lot higher odds of keeping your money for a longer amount of time. So yeah, this was Tesla. This has been the trade of the year because just off of Tesla, I'm up 2,000 pips, and that's just astronomical. And that Tesla leveraged out all my other trades because I didn't even really trade gold this month. I kind of took a step back from trading prop firms this month, and I've just been trading. I just been letting my Tesla ride out, and Tesla gained way more than I would have inside the gold market. So small wins. So we'll take them. But yeah, this is back to gold. I'm not going to beat a dead horse here, but yeah, there's the flag that I have. Gold is just broken this on the daily. So this is each candlestick you're looking at is the daily. This is one candlestick. So we just got to close above the last high, the lower high. Okay. Just for those, we're going to make it more obvious. Sometimes it's better to do this too, by the way. It broke that. It didn't break this. So now we get this inside the market, and this is the one that we were really looking at, and we're just getting that close above on the daily time frame. So that's perfect. That's exactly where we want to be at, is being observant of how this daily is closing, because what we could get is one or two things. We're going to drop down. Now we're on the 4 hour, and it immediately looks different. Okay, so we could get that close above right here. So the market, it just closed above. We could get one more push up. That was a horrible candle. We could get another push up, but also it may trend up for another day, have everyone fooled, form a little bit of stagnation. You get like a little bit of a flag right there, floating flag, and then the market pushes back in, and then it wants to give you something that goes lower. So the key thing here is you don't want to be catching, I guess I'm going to invert my chart here. So now I have an inverted chart. Kind of see it a little bit better on the inverted. It's a little trick for you if you don't do that already. If you're having a hard time seeing it the direction that you usually look at the market, say you have a better time looking at things in a bullish perspective, but it's in a bearish trend, don't be afraid to like inverse your chart to be able to see the structure that you need to see. But immediately after you have it marked up and you're able to mark it up a lot clearer, invert your chart back, because if not, you're going to be going on to whatever platform you trade with and hitting the opposite button. And then when you go back on there, you're going to be like, wait a second, why am I losing all this money? So I'm speaking from experience on that one. So yeah, wait for this. You don't want to catch a falling knife. Be patient. That's all I'm going to say. Be patient. And I'll be back. I'll look at the markets Monday evening, Tuesday evening, Wednesday evening. I don't really typically trade on Fridays. I usually have all my market areas covered during the slower part of the week. I'm trading Monday, Tuesday, Wednesday, Thursday, and if the middle of the week was slow and we're coming into Friday, I'll look to trade Friday. That's just, it just really depends if the structure is there. If there's not structure inside of the market, then I'm not gonna participate. Like right now, like that would be such an amateur move. The market opens up, and immediately the market opens up, and I'm just trying to sell without any clue or indication that it actually wants to sell. So we're just gonna be patient. Be patient. You want to anticipate, not react. So we're just going to anticipate that the market's going to provide us with some clearer structure, and we'll take it from there. So if you want to catch another stream, or you want more videos just like this, please be sure to like, subscribe, comment below. I'm going to give you the YouTube spill, of course. And then let me know what you would like to see more of. If there's some terms that you heard me mention inside this video, or there's some markets you would like me to look at for you, I would be even willing to do that as well. So I will catch you Monday evening. Have a great rest of your day, and I will talk to y'all later. Peace.